Welcome to another edition of my Money Talks video casts. I'm Jerry Slusiewicz, your host. We've got a couple of decades of professional money management experience. We've got a free educational newsletter to sign up right up above my head here on the banner. Again, where we try to help you become a better investor. We put out different articles more frequently. We do our podcast generally every Friday. We've got the radio show every Saturday. Trying to give you plenty of information, but once in a while we update these video casts as we see things change. So we had a potential game changer yesterday. It was some pretty big news out of Japan when Japan said they're going to lower their interest rates to zero and do another $400 billion stimulus. And with that stimulus money, what they're going to do is they've announced that they want to buy stocks, exchange-traded funds, and actually have their Federal Reserve Bank purchase stock market investments. And one of the Federal Reserve board members here in America cheered that on yesterday, and he was saying, that's just great stuff, that the U.S. should do that as well. And you hear these talks about quantitative easing. Again, this is Wednesday, October 6th, and they've been talking about quantitative easing for some time. So what exactly is that? Well, quantitative easing right now is where the Fed was supposed to take money that was maturing from the mortgage securities that they bought recently and buy Treasury securities. Well, that's happening, and it's happening in something that's called POMO, which is the Federal Reserve purchase of the open market operations, POMO, of Treasuries from the major 7 banks. And they're doing these things like yesterday, for example, on the 5th of October, it was a $5 billion purchase from the banks, and the banks get flooded with cash. And what do they do with the money? Well, lending's not increasing, business isn't expanding, so the thought is that they're indirectly buying the stock market by this Fed-induced purchase of open market operations, POMO. Now, with this direct purchase happening in Japan, or being announced that it's going to happen in Japan, and the U.S. seeming to embrace that, we are now in that battle, the tug of war, if you will, between weaker economic news and a Federal Reserve Bank that has a printing press in their backyard or in the back room that has unlimited ability to print dollars to purchase anything they want. They can buy the market. They can buy all the stocks. And why would anyone be in these bailout operations or more purchase operations if the economy were strong? It's not. The economy's not strong, folks. The stock market is trying to induce the strength by sucking people into the market to take advantage and get wealthy that way, and reinflate wealth to the general public so people feel more wealthy, and then hopefully things happen in the housing market and improve for the economy and for corporate America, etc. Hey, it might work. I mean, these people, the Federal Reserve people, are supposed to be very smart individuals, but when they did quantitative easing number 1, that was when they purchased all those mortgage bonds to keep interest rates low to stimulate housing. Well, interest rates are low. I mean, we're at multi-decade lows. So if you've got equity in your house and you've got good credit, now's a great time to refinance your loan. I've just done mine as well. So it's a great time because rates are low. But housing, unfortunately, is still at record low levels. Existing home sales, new home sales, huge low, bouncing along the bottom. We're just bouncing along the bottom. It's very low rates. So quantitative easing 1 wasn't really a success. So there's a lot of people, doubters, maybe myself included, that don't think quantitative easing 2, where they're going to buy stocks, is going to be very successful in stimulating the economy. But right now we have to watch, because I've been talking about this 1132 number breaking above 1132, which we did recently, and now we've gone back and tested that as recently as yesterday on the 5th, and now we're seeming to go back up. So this is a game changer, what the Fed's trying to do, and we're going to watch it, monitor it very closely, because we should probably, if this is going to be a successful venture for the Fed, and we'll see that in the tape by watching the market, we'll take more long positions, eliminate our short positions. Now, so what they're doing by getting that printing press going in the backyard or in the back room is they're killing the dollar. The U.S. dollar is tanking. It's going down, because we're printing more dollars. So if you had, $20 and, you thought $20 could buy you something, thought it was a lot of money, and then somebody says, here, look, here's 1,000 of these 20s, suddenly that 20 doesn't have as much value to you because there's a lot of dollars out there. And that's what's happening. The Fed's printing a lot of money. So it's going to be interesting to see what wins out. Generally, people don't say, geez, I got really wealthy because, we devalued the value of my money. Doesn't seem to work in my book, but maybe this time will be different. But they're trying to buy the stock market to instill confidence out there. And this has been a back and forth type regime. If you've been watching the markets we saw the markets in May drop 8%, another 5% in June, for a total of 13% from the April high. Then we went up 7% in July. Then we were down 5% in August, and now we've been up 10% since September 1st. Still net down from the highs of the year that peaked out in April. The thing that's changed, the big game changer, is now it does seem that indirectly the Fed is buying into the stock market, and maybe directly, soon coming to a stock market near you, the Fed will be purchasing stocks. With an unlimited ability to print money, they could basically take over the market. Interesting thing is my brother lives in China and has for a number of years. Years ago, people were afraid of investing in China. You said, well, geez, you don't want to buy into China because the government's communist and they could take over that country or that company and nationalize that company and take them over anytime they want. You don't want to invest in Venezuela because Hugo Chavez can nationalize and take over those companies anytime they want. Well, geez, now we've got the ability where the Fed can buy stocks and buy more stocks than you or I because they've got the ability to print money. They could buy more than CalPERS or any of these rich pension funds. So the government owns 90% of the mortgages because Fannie Mae and Freddie Mac were nationalized. So they are the biggest renter or real estate owner in the United States is the government. And now they bought a couple companies, as you know. They bought Citibank and they bought General Motors through their bailouts and Chrysler. Now we're in a situation where the Fed and by de facto the U.S. government could become the largest shareholder in the country as well. I'm not saying this is all going to happen, but these are things that it's very well documented. Look out what happened on the Bank of Japan and their announcements, what happened on the 5th of October, and some of the Fed announcements also from that day. I think it was Fed participant Evans. So these things are something worth watching. You don't want to bet against the Fed. There's that old adage, the Fed, don't fight the tape and don't fight the Fed. The tape might be breaking out. The Fed definitely is going to be pumping money into the system. We're going to watch that closely. We're going to go from net negative to net neutral. Our gold and silver have done extremely well. The market looked like it was ready to break down right before this announcement. This could be a new paradigm, which would cause us to go more the other way and go long going forward. We're going to try to look at high dividend stocks and still probably hedge it against severe declines. It's still a very tough environment right now with the October month, but generally after the election, generally after the midterm elections, usually you get a really nice run up in the markets. Historically, that's a proven fact. So we're pretty much changing our stance with some of these new announcements from extremely bearish to more optimistic. And again, we're going to watch the markets very closely. Call my office toll-free, 800-449-9501 for your free no-obligation portfolio review. And again, sign up for the free educational newsletter by clicking the tab above.